When it comes to investing, there's a whole lot of information that you need to know, whether it be for long-term investing or even short-term investing. But if you're a beginner, then you're probably not going to know this information. So I'll be going over the 5 fundamental pillars of investing that you need to know before you invest your first dollar into any asset. Before I get into that, however, please be sure to subscribe to the channel if you are new, because it truly helps out. And also smash that like button if you do enjoy this video. First up, one of the most important fundamentals of investing is having a time horizon. What a time horizon is pretty much a time limit that you set your investment for, so that you don't have any fear during the time that your investment is actually going on. So for instance, if you had $1,000 in Bitcoin right now and you said you wanted to leave it over the span of a year and take your money out after a year, then you leave it for that time. And doing this pretty much eliminates the fear of you losing money in the short term, because you know that at the end of the time that you set for yourself, that's when you really care about the results. So if you were to lose money in like a week, you wouldn't really care, knowing that price could bounce back by the time your investment horizon is over. Now, with a time horizon set for your investment, you could always reevaluate it at the end of that time, but you always want to make sure that you let the time run out completely before you go and try to invest more or take your money out. Next up, when it comes to investing, you also want to dollar cost average. Dollar cost averaging is pretty much buying that same investment in small increments over a longer period of time. Overall, this is going to help minimize your risk, and it's also going to help with your average price. As volatility continues, you'll still have a decent average, considering the fact that if price was high, you bought in, and if price was low, you still bought in. The best part about dollar cost averaging especially is that you won't have any regret, because if price really did drop a whole lot, you could still buy in at that cheap discount as opposed to buying in when it was a lot higher before. Now, next up, in order to be a successful investor, you need to have diversification in your portfolio. And what diversification is pretty much buying multiple different assets to make sure that you're always balancing out your risk. Diversifying could pretty much be buying into different ETFs and stocks or crypto. For instance, if you're buying into stocks, you would consider buying into tech stocks, real estate stocks, or REITs, or you'd even get into buying ETFs. And doing this pretty much mitigates your risk because you're in every little sector. So if one sector of the market were to be down, the other sector that you're in that's in the positives could also hold up your investment. Having a wide range of assets also allows you to be a lot less fearful when it comes to letting your money run. And at the same time, it's allowing you to make maximum profits, considering the fact that you'll be taking part in every little category possible. Next up, it's also extremely vital that you understand what you're putting your money into. If you have not done any prior research and you're just going off of what a friend told you, then you should definitely consider reading into your investment, or even trying to see whether or not this is a good investment to make in the first place. In a lot of cases, social media can easily influence your mind, and it'll make you make the worst decisions possible because you're kind of going off of what people said as opposed to what's really written down. It's also super good to learn the basic fundamentals of technical analysis, because this really helps you with being able to read charts and give yourself a basic understanding of what you're looking at. Pretty much, if you don't have knowledge, then you really can't be faithful in what you're investing in. So you're going to be constantly fearful, and you're pretty much going to want to take your money out whenever you see a small dip. But once you see what the project that you're invested in truly holds, then you'll be a lot more confident holding on because you know what it's capable of. Lastly, when investing, you always want to take advantage of compound interest, which is where your initial investment is always going to start off as more the next year, considering the fact that it went up the previous year. So if you started off with $50 and your investment went up, let's say 10%, so now you're sitting at $55, you'd start off with that $55 as your initial investment for the new year. And doing this pretty much allows you to make maximum returns, considering the fact that this is like a huge snowball effect, where each year it gets bigger and bigger and it continues the momentum. By doing this, you're making a lot more profit, considering the fact that each year you're going to be starting off with a lot more money. Compound interest can also be called interest earned on top of interest, if that's how you know it. So in other words, just find a way to get your money to work for you and consistently build itself up every single year. Overall, when investing, you want to make sure that you have a time horizon. You want to make sure that you dollar cost average. You want to be extremely diversified in your portfolio to avoid being fearful, or to avoid just being stuck in one category, considering the fact that anything could go down at any given moment. You also want to have a very good understanding of what you're putting your money into, and you also want to take advantage of compound interest when it presents itself. Overall, if you follow these very few tips, then you'll be able to become a successful investor for the long run easily, because you already have a decent knowledge that most people don't even know. So if you guys did enjoy this video, please be sure to subscribe to the channel and smash that like button, and also comment down what you'd like to see in future videos. Other than that, I hope you guys have a great rest of your day, and I'll see you in the next one.
See you, chump.